Okay, everyone, and welcome back to the Morning Answer webinar. And we'll go on and finish up the news and then get into the bias chart. So one of the reasons that the euro was pushing a little bit lower, staying lower this morning, although yesterday, as I noted, we came into some good support at the 743 area here. Now we were able to, and you can see where that held it. We tried to dip a little bit below it, and we're just up holding here, okay. But you can see where the pressure was is, we'll get into the news. Saw that European morning pressure. A swinging sentiment against the euro dominated major currency markets for a second day on Thursday. Weak initial readings of the German regional inflation prodding the single currency back to 9-day lows against the dollar. Dollar bulls are still recovering from the collapse in faith of the Trumpflation trade caused by last week's defeat of the White House on healthcare, and the greenback was again struggling to make progress past 111 yen. But against the euro, gained ground around 2/10, and early deals in Europe trading at 107.37 after German state Saxony reported a slump in inflation to 1.8 from 2.4% a month ago. That was below the European Central Bank's roughly 2% target, and followed a blow to the euro from signs that the ECB officials were unhappy in a shift in market expectations towards higher monetary policy and higher Eurozone rates. We really want to get through a bit more data before we draw conclusions, but yesterday clearly put a damper on the front end rates has weakened sentiment towards the euro, said Citi G10 currency strategist Joshua Byrne. The mood around the dollar has softened a lot. On balance, I think most people will still buy into the stronger global demand story, but maybe a bit late in the day to be chasing the theme. The fall for the euro down from the 4.5-month high at 109.06 scaled on Monday helped the broader dollar index in a positive territory, up 110. Sterling knocked back by dollar's recovery as Prime Minister Theresa May lodged Britain's formal request to leave the European Union on Wednesday, was down 1/10 to 24.14. As I mentioned, we've seen the cable working hard. We just showed that a few minutes ago. We really need to get a 2-hour close above 24.57, preferably 68, to open up the door for us to challenge above the 25.03, closer towards that 25.40. If we can get that 2-hour close above that would allow it. I think that yesterday when we got the fall, I think people were probably, and myself, I thought I would have gone even lower. So I think that's some short covering that we're seeing here. Probably a little bit disappointing. The cable would have pulled back even further. The rest of German numbers will drip out as the European morning comes. Appearances by 4 ECB policymakers will also be watched closely for confirmation of a Reuters report on Wednesday based on unnamed sources. Sources said the policymakers were taken aback by the market's move to price at an interest rate hike early next year and would be keen at the April meeting to reassure investors. Well, we already covered that this morning. We were covering the headlines as they're rolling down, and you can see here. ECB now says asset buys should be wound down as quickly as possible, but says sequencing of policy steps and ECB guidance makes sense, but no need to revisit the policy guidance. And tapering should be brought down only if the economy performs better. So like I said, the European Central Bank could start winding down its massive asset buying scheme earlier than planned, but only if the economy continues to outperform expectations, Dutch Central Bank Chief Klaus Knot said on Thursday. The Eurozone economy is on its best run in a decade, has already performed better than expected, projected for the most part since September, and the strong run could still continue. Not a policymaker who has opposed many of the ECB's past easy measures told a news conference. Only if the economy does even better than we expect in our estimates should we consider bringing the taper down, Not said. Return to the ECB's plans to buy 60 billion euros worth of bonds each month until the end of the year. But since September last year, the economic surprise indexes have been turned around and are on quite a high level, Not said. They are better than our expectations, and why shouldn't that continue the rest of the year? The ECB plans to buy at least 2.3 trillion euros worth of bonds, all in hope of cutting borrowing costs to revive the growth and ultimately to generate inflation. Not add that even the asset buys continue until the end of the year as now planned. They should then be wound down as possible in 2018. But he dismissed the calls by some policymakers to review the bank's guidance for keeping the rates at the present or lower levels until well after the asset buys. I think the sequence makes sense. The forward guidance makes sense. I don't see a need to revisit that now, Nod said. It's a sequencing that has been applied in the US and the UK when exiting, and the logic is one of a consistent communication message, which is neutral along the yield curve, which prevents conflicting views as to the front end. So, as I said, he's not for that at all. You know, moving on. And covering it, this is a little bit later in the Eurozone day. It says the euro dipped, and bond yields hit multi-week lows on Thursday as easing inflation in Spain and Germany led investors to roll back further on expectations of when the ECB might tighten monetary policy. The single currency dipped 0.3 against the dollar, and the yield in Germany's 10-year government bond, the benchmark security for the region, hit a 3-week low. Signs of economic strength and strong inflation data and acknowledgments of these factors by policymakers fuel talk by the ECB might soon switch out of its stimulus mode and follow in the footsteps of the U.S. Federal Reserve, which has embarked on a rate hike cycle. The Spanish numbers, but inflation, consumer inflation in Spanish eased to 2.1% in March, missing Reuters polls forecast of 2.7, and the regional Germany data pointed to a similar downturn in Europe's biggest economy. The Spanish numbers are pretty weak, and the German regional numbers have also seen a fair bit of slowing. I expect that's another reason you have a weakening euro, said investment economist Ryan Dias-Putra. On Wednesday, 6 sources in and close to the ECB governing council told Reuters Eurozone policymakers were keen to reassure investors that their easy money policy was far from ending. Prior to that report, money markets were pricing the possibility of an ECB rate hike in December and fully pricing one for the March. Both were seen as less likely on Thursday. Euro may also come under pressure after May formally began the Britain's exit from the European Union on Wednesday, launched a 2-year negotiation process. Sterling was down 0.3, having skidded a 1-week low of 123.77. Oil prices up on disruptions in Libya. Reassurance overnight from U.S. policymakers went some way towards bolstering faith in the economic policy direction of the world's richest country, giving support to the dollar. The greenback edged up against a basket of 6 major currencies and stayed off the 4-month lows hit against the Japanese yen earlier this week. It fell last week after the failure of President Donald Trump's U.S. healthcare reform, but brought the Trumpflation trade into doubt. Chicago Federal Reserve President Charles Evans, a voter on the policy setting FOMC, said on Wednesday he supported further interest rate hikes this year, given progress on the Fed's goal of full employment and stable inflation. So that continued to also weigh on the euro. Now the euro is holding steady. The key thing is that as we go into month end, people are a little bit cautious. We've already had big moves in one direction. You know, the euro was down. Then after the FOMC, we had this nice rally. Then it turns around and gives up that rally. And going into month end, I think people are playing it relatively cautious. And the bonds are staying, pretty firm themselves. Wrapping it up here on the gold. Gold dipped on Thursday as the dollar strengthened, but economic uncertainty around Britain's departure from the European Union and approaching French elections capped losses. We might see support from French elections if the results are better than expected, Bernard Danda, a precious metal analyst at Taxis, says. Emmanuel Macron is on course to come out on top of the first round of France's presidential elections next month and to go on to win May 7th runoff against the far-right leader Marine Le Pen. In a lab poll showed on Wednesday. Gold is often seen as an alternative investment during times of political and financial uncertainty. In Britain, May formally banned the divorce procedure from the EU on Wednesday, saying there is no turning back. The market seemed to take the notification of Article 50 in UK relatively smoothly, but I suppose the worst is yet to come on that. analyst Daniel Hines said. But certainly there's a tiny bit of safe haven buying. The dollar is up on a 9-day high against a basket of currencies. A strong greenback makes the dollar-denominated gold more expensive for holders of other currencies and potentially lowering demand. The dollar was also boasted by Charles Evans, who said he was in line with most of the colleagues in supporting further rate hikes this year. And other precious metals, silver slid as much as 0.5% to 18.15. We'll take a quick look here on the Gartman information. The Forex market is relatively quiet this morning, and perhaps the only material point of consequence is that the Canadian dollar, the Mexican peso, and the Russian ruble are leading the way higher relative to the euro, the yen, and the British pound sterling. What then we must ask, do the US dollar, the Canadian dollar, the Mexican peso, and the Russian ruble have in common that would allow them to all strengthen? The answer is the latter three are all oil exporters, and the U.S. soon shall be also if the current trade and trends in oil production here in the U.S. continue. Further, in the case of the U.S. dollar, the Canadian dollar, and the Mexican peso, perhaps we are seeing the market's collective response to the notion that the North American economic growth shall be stronger and stable than shall be the European growth in light of the British removal from the political union. Concerning sterling and the imposition of the Article 50, there is and shall be talk of regarding an exit from the Brexit, a Brexit here as it were, and the talk may increase over the coming weeks and months as negotiations Britain's removal from the political union there grows apace. Interestingly, most of the talk regarding the Brexit exit is not from the British, but is instead from the continent, where it appears that Germany and France would obviously prefer the status quo and want Britain to reconsider its position. So we're going to move into the 2-hour charts and bring out the bias chart. I don't know why that thing doesn't change. There it goes. So we had support on the euro dollar at 734. The low for today was 731. As we talked about it, we've had this run up, and one of the things that we discussed, we were looking for the euro to move higher after the FOMC. And one of the things we argued was that over the last 6 weeks or 7 weeks, that the euro had positively diverged from the dollar. Even though the dollar was making new highs, the euro was holding up really well. The euro could be much lower, and it was holding up. And we've seen on the day of FOMC, we saw Deutsche Bank, pull back its outlook for a euro below parity, and since then we've seen 5 other banks do the same thing, and that opened the door for us to go higher. And we talked about how expectations that how you would have to revalue the euro. Got the bonds on their highs right now, but we'd have to adjust the valuation, how you want to go and look at the euro, because we come, it not only had it positively diverged, but that that if the expectations were that the ECB could maybe adjust, they're saying that they're not going to now, they're not in any rush, adjust their policy, that we could really move. At the time, Deutsche Bank was looking for a move above 108, and potentially by quarter end, a move to 110, a squeeze to 110. And we can still see that. Like I said, right now we talked about getting below this 762, which we are right now, but on a daily close, and that at that point it doesn't turn it bearish; it just turns it into a corrective mode. Now, if we're going to go into a corrective mode, then that would suggest, which we didn't close below 762, we closed right on it yesterday, would suggest a move down towards the 710. We could even get a little bit further. And so right now the momentum has changed into the year where it was really bullish. We got overextended. The market tried to make that extra move. We couldn't make it. It was kind of running out of gas. And then we just started pressing lower, which is where we're at now. We've kind of pushed lower here into this area. Well, so now we're into month end. We're going to see, I think this market's trying to be careful with itself. And here you almost see like a head and shoulders here. I pointed that out a couple of days ago, potential head and shoulders forming. To see if we decide to really try and break, we'll have to see what catalyst would be on there. But right now it's still more in a corrective mode, per se. But I still think that moves back towards the 8 would probably we talked about that. We'd have to get a 2-hour close above 820 to open this up. Now, at this point, once again, any rallies back, I think they would fade those until the year has proven itself, because now you just saw, and that's why I like to take a look at the news, you saw the weaker inflation numbers, which pushed the euro lower, and it basically has taken out that portion of the story where, the ECB could be adjusting their policy sooner and then giving the euro the impetus to move a lot higher. For right now, we did have it at 734 to support this, and the low came at 731. We're trying to look at areas where the market could eventually get to. So we've been talking that, I know on the 30 minutes, 714, on the 2-hour, 710, we've got 701. I guess we'll try and split the difference and say that it would be 705, that we could, take another move lower. When you look at the euro, we'll take a look at it on the 30-minute. I like to look at it the 30-minute and the 2-hour. Here's at 714, and if we come down here, that takes us to 706. There's a 701. We'll go on and say just right there, 696. We're going to put that in case. What we're looking at is, where would the market go to before you think you'd start to see people that are bearish, or even people that are bullish would say, okay, I'll step in and take a shot there. Let's go and push it as low as 696. Obviously, it's still in the sell mode with the EMAs. And on the upside, we know what it would take to turn things around, but where would they be looking at for resistance? We'll go back to the 30-minute for that. And I think that for resistance, you'd be looking up here, the 798. Right there. So we'll go with that 798 for resistance. Now, don't forget that on the daily, this is where it counts. There's that all-important 762 we've been talking about since last week. So we didn't close below it yesterday, but we are below today. Whether or not we're going to close below it, if we close below it, it really opens the door for a corrective mode. And that corrective mode, I guess we could even go on a daily, would have to push us down towards potentially on that corrective mode could get us down to 672. But once again, if we can reclaim the 762, that'd be huge today because we didn't close below it yesterday and we would have gotten above it and we would have closed above it. That would open the door for us to probably go and test back up here to this 8. You could even push up to 805. But as I said before, we need to close a 2-hour close above 822 to open the door to challenge the all-time highs. Yeah, Luca says Fed boys are beating the war drums again. The market may have to push the June hike probabilities higher. That will give the dollar fuel for a bounce here. I unless we continue to get good, strong employment data, and I mean very strong employment data, I don't see them doing it in June. It just because then you're just whacking the economy. You'll raise in December, you'll raise in March, you'll raise in June. And they're concerned they don't want to slow this economy down. Now, if you continue to see good employment data, and I mean very, very good, above 200, yeah, then I think that'd be a real possibility. Then we could, but that's what it would take. So that's what we'd be looking for a little bit extended. You can see here we're still under pressure here in the euro, currently right now at 739. And we'll take a look at the cable. We had 2409. The low was 2402. So the key is going to be would need a 2-hour close above this level, which is 2457, and preferably really right there, which is 24. Well, actually, I've got 71. I was saying 68 earlier. But we need that close above 57 on a 2-hour close to really open the door for us to test up in here, which would open the door for a 2528. For right now, just plain old simple resistance would be, we got that 2509. I like that. And I had support for 2409. The low is 2402. I mean, if we start to rotate lower here, we're really going to have to test much lower. But for starters, I think we have to be looking there, 2372, if it were to take a dip. And that'd just be a pause because I think we'd have to ultimately test lower.